Freedom Finance is analyzing the housing market. And the reason why I wanted to discuss it is the last few years have just been crazy when it comes to this housing market. In 2020 and 2021, the housing market started booming. During the pandemic, everyone started buying new houses. And then in 2021, we started seeing prices skyrocket and just booming. And then the Federal Reserve kicked in and they started getting involved to increase mortgage prices to slow down inflation. So I want to go over the housing market, a little bit of the history and where we're at today. So that way we can understand what's going on with the housing market and how it's going to impact us. So let's start off really quickly with some average median sale prices around the US housing market. Right now, as of September, we sit at $428,000 for the average home price. Now, we hit a high in June of $442,000 to $420 for the median sale price. So it has gone down for the last 3 months straight. And there's some interesting things we can see right here. The number of homes sold over the last year has been 403,728,000, and we see that's down almost 5%. Now, we also see this report from Yahoo Finances, from the National Association of Realtors, stating that homes sold are down 3.5%. So the numbers are a little bit different here, but it's interesting to see because prices went up this year. They're down the last couple months, but for some reason, we're still seeing prices go up while sales are going down. Let's get into mortgage rates next as I go into the prices that we've seen the last month or so go up to 6.44%. We had a low of 6.0% for a 30-year mortgage. That comes from the Federal Reserve dropping rates, and that's great because we hadn't seen over the last few years rates go that low. As you can see, rates have been sky high up to 7.79% within the last year. So rates went down, but they've been going up at the same time. Meanwhile, sales somehow have been going down. Next, I want to go over the median sale prices within the different states. And this is very interesting because the median sale prices tell totally different stories from state to state. So I have the national average for 428,000 for a median sale price for a home. However, I broke down each state according to Redfin. Montana, North Dakota, and Wyoming unfortunately don't have the exact data. Every other state, including Washington, D.C., does have that information. California is number one, the highest state, as many probably could guess, for a median sales home cost at $818,000. That's $390,000 over the median sale price. So that's almost double. That's probably 85, 90% higher than the national average. At number two, we have Hawaii at $768,000. And number three, we have Washington State at $635,000. The median sale price, we're looking at Connecticut. That is the closest to the median sale price of the national average. Connecticut is just $2,304 over the median sale prices. Now, when we look at the lowest states that are the cheapest, we have Iowa at $237,000. We then have Oklahoma at $245,000, and then we have Louisiana at $250,000. Those are all well below the national average. When we look at the story of the sales, we'll see why. So, California, extremely high prices, and we've heard all these stories of businesses moving out of California, whether it's for political reasons or just poor business practices. But over the last year, they have increased their sales about 1.1%. It's not crazy. It's not crazy high, but since October 2023, sales have gone up. However, you can see a trend downwards. But sales have gone up over the last year, and we see a 4.2% higher price at $818,000. Now, when we look at Hawaii, we see something very different. There are not a lot of homes for sale. I think they're down about 10%, but they only had about 900 or so homes for sale. So I'm going to go ahead and skip to Washington State, which is up 1.7% home sold year over year. The third highest median sale price of $635,500, 5.6% increase in median sale prices. It's been pretty steady going up over the last year, but there hasn't been as much change as there has in California. Let's move on to some of the lower states. So Iowa is number one cheapest median sale price in the United States. It is up 4% year over year, but it's only 237,000 altogether. But you can see we're down 11.2% year over year. Over the last year, it hasn't had too much change for number of homes sold. But what we do see over the last 3 years is a slight trend line downwards, especially when we look at September 2021. But it's been really inconsistent. It goes up during the summers, as the real estate market often does. But let's look at 5 years. It's just a bump year over year over year. But the peaks are lower each year, you can see. So Iowa has the cheapest median sale price, but a really odd sales line. Let's go ahead and look at Louisiana, which has the second or third lowest in the United States. It's $250,000, and sale prices are up about 3.8%. Home sold is down 15.4%. That's quite a bit. We can see the drop here, and we see a little bit of a boost over 3 years. If we look at 5 years, it's even less consistent than Iowa is. It's a slight trend line downwards if you map from September 2019 to September of 2024. It's down. It's definitely down. But it's very interesting to see these numbers overall. So we see existing home prices or home sales are down the lowest in 14 years, according to this article. And even with Redfin, we can see it's a minus 4.8% down year over year. Now, the interesting thing is, as we look at this, the impact to people, people are still having to buy prices at that $428,000 average with mortgage rates of 6.44%. So the average mortgage for a new home sale, it wouldn't be surprising if it's $3,000, almost $4,000 for an average mortgage price. And there's no way that the average family could really keep up with this trend. So we're going to see how long this trend lasts. If sale prices are dropping, then our mortgage rate's going to go down. Our price is going to go down, because we look at Freddie Mac right here. In general, higher rates reflect the strength in the economy that is supportive of the housing market. So we have higher rates. It's saying the economy is much stronger. There's definitely something that's off about our mortgage, about our housing market today. We're going to have to analyze, and maybe 5-10 years from now, it'll all make sense. The story will come together, whether it's a little bit of COVID, a little bit of politics, a little bit of economic policy, but we won't really know the true story for another several years. So we're going to keep analyzing, and we'll keep you up to date.